Tough times call for tough measures, and there's a lot of people that have been affected by recent events. Thankfully, we live in a country that if you've been subjected to something that wasn't your fault, there are avenues available for you to be able to be compensated. We're going to talk today about some of those avenues from two very different angles. One for a COVID JobKeeper allowance, and the other from a personal injury future economic loss allowance. And to join me on this chat today is Peter Alwis and Angus Lillicrap. Welcome, gentlemen.
Hi, Ashley.
Hi, Ashley.
Okay, so I've just highlighted the difference between possibly the two types of, and let's just call them compensation for the time being. But Peter, if I can just throw to you in the first instance, somebody is applying to one of these government agencies for the JobKeeper allowance. What's the first thing that you do?
The first thing what you should do is to find out who involved is that. So it would be your employees, you, government agencies such as ATO.
Absolutely. And now, Angus, in your situation, when someone's, and we're talking obviously in your case, we'll use a corporate example if we may, Angus, of a sole director of a company, sole shareholder who's suffered an injury through no fault of their own and now has to prove future economic loss. Mate, what's the first thing that you do?
Again, Ashley, the first thing that we do is identify the parties involved. So in this case, it would be an individual, a sole director or a sole trader, and a compensation payer as well as the person on the other side.
Okay, so that's pretty simple. So we've worked out who the players in the equation are. So the next step, Peter, what's that?
Well, the first thing is to find out what triggers your qualification to access the benefits offered by state governments and both state governments and federal government. So it could be you need to assess your downturn in your turnover. If you have already suffered a downturn, if not, if you forecast a downturn in next couple of months, you still qualify for that, and that triggers your qualification that enables you to apply for the available benefits.
Okay, Angus, and what are the facts that you look for?
Yep, so after identifying who's involved, you need to look at the facts. The facts are things like what did you earn, how much have you earned in the past, how much was your business earning in the past, how long was your business earning that for, did you have any plans to sort of increase your business earnings or your individual earnings into the future, and then looking at what you're currently earning now. So seeing any decrease in earnings and assessing what's gone on.
Absolutely, that's a good question, and probably pretty similar for you, Peter, that is just taking stock of the numbers, the facts, the times, the dates and the places. This is how much I was earning up until now. This is how much I'm earning now. This is how much I'll expect to earn in the future at a future date, which I think is up to 6 months. Is that right, Peter?
Yes, that's right.
Okay, so now we move on to step 3. And step 3 in the process is, what's the objective for the client? Angus, we might start with you this time.
Thanks, Ashley. In our case, the objective of the client is to prove that they've lost business earnings or lost profit as a result of circumstances outside of their control.
And Peter, is that a similar objective for you?
Yes, so you need to prove that you are qualified to apply for JobKeeper allowance.
So we've got a similar thing there. The main objective for the client here is to prove that there is a loss of earnings that needs to then be essentially capitalised into a lump sum, or in Angus's case, or an ongoing payment in the JobKeeper allowance situation. Now, if it was all that easy, we'd all be doing it and we wouldn't have to make videos about it. But there's obviously some obstacles. Angus, what are the obstacles that people have when they're trying to prove future economic loss?
Yeah, Ashley. So the primary obstacle that most of our clients face is evidentiary. They don't know the types of evidence to collect to prove their economic loss, and they don't really know how much of that evidence they need to satisfy the compensation payer, who's ultimately the person deciding whether it is enough or not.
Okay. Peter, probably pretty similar to you, is it?
Yeah, Angus, it is definitely, most definitely, the number one obstacle a lot of business owners face is not having up-to-date records. The second thing is, of course, not having their statutory reporting up-to-date, such as BAS, tax returns, etc.
So we've got the type of evidence, how much evidence, and as Peter suggested there, the quality of that evidence as well, and particularly in this case, your financial evidence, it needs to be up to date and it needs to be bulletproof. So if we were to just pick out of that, what's a to-do list, Angus, that you could give somebody that would enable them to take the next step in proving their loss?
The first thing that we would do is obviously collect all the records that already exist. So collecting records from your employment and records from the ATO of tax that you have paid and income that you have produced in the past. Then we need to look at moving forwards and collecting evidence about how that's going to impact you into the future. That means things like perhaps speaking with an accountant and getting an accounting report, or finalising and tidying up some tax records that have been filed in the past, just to ensure that they reflect the situation that you are actually dealing with.
Absolutely, and then perhaps even if the client could work through some kind of calculator, quantum estimator on their own to get a bit of a feel for what those losses would be worth. That'd be useful for them too, I'd imagine.
Yeah, it would be. It really helps to have a document that sets out all of the things that you should be looking at and collecting to support your claim for future economic loss.
Yeah. And Peter, in your situation, what sort of to-do list or templates would you give to a client that had to prove that their business had a 30% reduction in profitability and revenue?
Yes, Ashley. So it's not only assessing the reduction, but also it helps. The templates helps them to assess how much benefits, the value of the benefits they can access to, and the timing of the benefits they can get in.
That sounds like a wonderful resource. Okay, well, thanks, gentlemen, for joining me here today. We've got a topic that could be a topic that could be very confusing, but with the benefit of a simplified approach, a 7-step plan, and some templates from Peter, and a work list and a checklist and a workbook from Angus, I think you'll be well on your way to making headway with any of these potential reimbursements for losses that you've suffered that weren't your fault. So, gentlemen, thank you very much for your time.